The number one deterioration in America's wealth is taxes. Taxes, taxes, taxes. If you don't know that, ask FIFA. Ask Spain how it feels like to have the IRS take 30 to 40% of your winnings. Ask Americans what it feels like every time someone talks about supplying capital to the government. They talk about taxing everyone with higher rates. State taxes, local taxes, property taxes, sales tax, ad valorem taxes, federal income tax. I got news for you, folks. The fastest way to go broke is to not focus on how to eliminate or minimize the taxes you owe to the federal government. The one thing that's really important to know is that although we have this massive crude oil supply across the globe, although the United States is the number one oil producer at 13.8 million barrels a day and growing very slowly, very little, but it is growing. The fact that we burn 21 million barrels a day of crude oil and we have to have a differential of importation of 5 to 7 million barrels a day, that's all great and good, but there's one big factor that most of you are totally unaware of. The U.S. government, under the Tax Reform Act of 1986, suggested that they reward high-income earners and high net worth individuals in this country. We will encourage you to drill and participate in domestic exploration because we need the oil. We need the investment dollars. So let's go talk to those that we want to tax the most and say, look, if you'll help us accomplish our goal, we'll give you tax write-offs. We don't want to. We don't want to give you write-offs. We want you to pay all the taxes that we put on that IRS notification. We want every dollar we can get from you successful Americans. But if you'll play by the rules and you'll buy real estate with cost segregation, if you will buy oil and gas interest in drilling wells domestically in the U.S., we're going to reward you with massive tax write-offs. Well, it started in the 1986 Tax Reform Act and was further extended and further enhanced by the One Big Beautiful Bill passed last year. And it says very clearly, you make $1 million a year, your average tax rate is going to probably be, in a normal state without state income tax, between 33 and 37%. How'd you like to make $1 million and write a check for $370,000 knowing that you worked to about the middle of June before you actually took home a paycheck for yourself and not paying the federal government? But if you took that same $1 million and you invested in domestic exploration, you could literally take the One Big Beautiful Bill and say, you know what? I took $1 million investment in drilling. I don't owe any taxes on that $1 million. I just saved 33 to 37%. Now look, this is not about convincing you to go out and drill wells. 99.9% of you don't qualify. You don't have $5 or $10 million net worth. You don't have $1 million to invest. You don't have $1 million of income. But I'm pointing out one critical thing. The United States government and the IRS clearly dictate what is the most important thing to this country by the tax laws they put in place, by what the House and the Senate and by what Congress puts in place. But since 1986, they have left the Tax Reform Act in place, which allows high-income earners to take off substantial 70 to 80 to 100% of their investment in drilling domestic wells off their federal income tax liability. That tells you one thing. For 40 plus years, the most important thing to Congress, Democrat, Republican, Independent, do not mess with high-income earners investing in domestic exploration, because why? We need every barrel of oil produced and explored for and extracted here in this country because we are the largest consumer on the planet. We consume about 21 million barrels a day. We make 13.8 million barrels a day. And the wells we drill today, although they're phenomenal wells, they decline at 45 to 65% in year one. In year one. If we didn't drill another well today from 13.8 million barrels a day, we could lose 1.5 to 3 million barrels of oil in the next 12 to 24 months. That is a precarious treadmill that we're on. So back to my point, taxes. If you owe more than $200,000 or $300,000 a year in taxes, you should be looking at the advantages from the Tax Reform Act. You should be talking to your financial advisor, your CPA, or someone who can give you advice and information about what it means to use the rules that the IRS has put in place. The IRS doesn't give you anything for free. They want every dime they can make. Congress gives you nothing for free. The president gives you nothing for free. What they're giving you is what they want. And they want your money to go into real estate with cost segregation, but they really, really want you to drill domestic oil and gas wells. With the Iranian war and the Strait of Hormuz shut and oil at $87 a barrel today, going to $100 a barrel, in my view, in the next 30 to 45 days, with the possibility of $150 to $200 a barrel in the next 6 months, boy, I would sure want to say, how could I save taxes, drill a successful well or wells, and generate income while using the IRS's money because they said, follow my rules, keep your money, make a nice profit, and do the one thing that makes you wealthier and wealthier, and that is manage your tax liability using the laws and the rules and regulations on the books that exist today and have existed since 1986 in the Tax Reform Act. Save your taxes, save your money, invest in oil and gas, public, private, you make that decision, but 99.9% of you are not qualified.